Ladies and gentlemen, we just don't stop, okay? I got another hot one for you today, earnings. We love earnings. We're going to talk about Blink Charging today. Haven't talked about this stock in a hot minute, but obviously a former position of mine just reported earnings. You see some mixed results after hours. Right now sitting down, but this is after down 9% of the normal trading session. So you'd almost expect to see some sort of recovery. And if it was negative news, you would really expect some stagnation potentially, because hard to go further down than you're already 9%. So we'll see what these earnings look like and see why the stock's doing what it's doing. So you can see here they put up a GAAP EPS line of negative 18 cents, missed by 3 cents. Obviously, company's not profitable. We've known that for a while. I want to see what that equates to in terms of a net income line, though. Really a net loss. The revenue line, not too bad. $2.23 million, up 72% year over year. It's a beat by $0.44 million. So overall, it's a really good beat for them in terms of their expectations. And good growth, too. 73% growth. Not too bad at all. Some of the cliff notes here. 1,597 commercial and residential EV charging stations were contracted, sold, or deployed during the first quarter. Good to see that, obviously. They're making the majority of the revenue off devices right now, not shockingly. And eventually down the road, services will become the main portion of it as more people have to charge up. On March 31st, 2021, cash equivalents, cash and marketable securities were at $232 million, while compared to $22.3 in December. So they raised quite a bit of capital, as you can tell. So we'll see what that looks like. Some more fine details. We love seeing it. Revenue from product sales was up 113% to $1.7 million. And revenue from network fees, warranty fees, grants, rebates, and other revenues increased 100% to $0.4 million. So again, obviously product sales, the number one portion of this business, as you saw. So we will look at the press release. I like looking at the press release, okay? I really do. Good numbers for revenue, as we saw. Not too bad. Some highlights: the company made continued progress with the owner-operator strategy. The number of commercial Blink-owned charging stations contracted and deployed during the quarter grew by 370% in the first quarter compared to the prior year period. Pretty significant growth, obviously, in number of chargers. And with that, the number of chargers deployed obviously equates to ideally more for them in the future as companies, or really people, charge using their charging stations. So revenues from network fees and warranties increased 100%, and revenues from charging stations decreased to $0.2 million compared to $0.3 million in the first quarter of 2022, primarily to a decrease in EV charging due to the pandemic. Hard to blame the pandemic on people not charging their vehicles. I don't think you can necessarily blame that. In my opinion, I don't think that's fair one bit to blame that the decrease in charging revenue on the pandemic. You just can't do that. I'm sorry. I don't accept that excuse. It's not an excuse that I am willing to accept. Because, frankly, there should be no impact, right? Your vehicle doesn't matter how much you have to drive it. It doesn't matter. You still have to charge it the same. So I'd expect with so many more units developed and deployed that you would see a better number in terms of this charging revenue. So quite debatable on that. Net loss came in at $7.4 million. Not too awful compared to a net loss of $3 million in the first quarter of 2022. So what scares me, obviously, is that net loss is widening. Now, they grew the business by 73%, but they grew the net loss by over 100%. We're talking about 150% growth in the net loss with only a 73% growth in the business. So I'd expect to see that revenue line a lot better if we're going to be posting this type of a net loss line, in my opinion. So that may be hard. I'm not passing out. You're passing out. No one else has been awake since 1 here. Have they? I have. It's me. CEO says Blink's off to a strong start. I might disagree. I think there's some opportunities there in terms of the value of the stock. So they received a grant from the State of Ohio Environmental Protective Agency, deployed 144 Blink-owned charging stations. Level 2 says right. Obviously here they just mentioned some business updates, some being companies that have purchased some, as well as who they could potentially be contracted with. I do want to look at the balance sheet as I do, and then let's look at the stock in terms of value. As far as assets, $237,000 in total current assets. Not that much cash and cash equivalent, can't lie to you, compared to 237 million compared to 225 million of a year prior. And again, look at that cash position. Grew from 22 million to 195 million. So significant growth there, in marketable securities grew by quite a bit as well. So clearly they rose capital. And I'm not a huge fan of the idea of raising capital personally, because it devalues the stocks. It really does. It devalues the cost per share for the average yay tall shareholder. You and I, the layman, we deserve valuation. Total assets came in at 251 million compared to 33 million. Really close to 34 million. Wow. Total current liabilities coming in at 6.7 million compared to 6.1 million. So a small growth there, not too incomprehensible. While liabilities came in at 8.7 compared to 6.8, I should say. So growth there, but not nearly as much as they grew that asset line by the raise of capital. And obviously, you can see that in this additional paid-in capital number, quite significant. But shareholder equity technically grew by quite a massive margin, 243 million compared to 27 million. My concern here comes with this stock. When you look at the valuation of this company, obviously there is no PE ratio, no forward PE ratio to go off of, but you do have a market cap to look at. The company's market cap is over $1 billion, and we're talking about a company that won't even do $10 million in revenue this year, and they're valued at over $1 billion. I think that's incredibly expensive, and I don't think anyone would disagree with that. We're talking about 100 times the value there, and I get the hype around it. It's because the fact that the future looks bright, right? We see the future. This should be a company of the future, with what they're going to do. If they don't, obviously, lose themselves, they don't eat themselves out of a job. Let's just hope that doesn't happen for them. But the concern is valuation with this one. I would not buy this one at these levels. If you were, I would do a very much slight spec play. I think it's fair to do a slight spec play on this one potentially and see if you might get bounce up. But I don't think it's necessarily going to have that response necessarily soon. It all kind of depends. We're hearing a lot about electric vehicles, some positive, some negative. We'll see what it looks like. But you look historically, the stock's been favorable. I mean, there's no doubt about it. Back when I owned it, cheap. It's now up 1,400% since when I used to own it. Not like I sold way too early when it was at $8, but I did. And I hate my life, and I'm never going to let it down. Just kidding. We move past mistakes we make, okay? We move past every mistake we make in the investing game, and we all make them. So never feel bad about it. All I can tell you is this stock, not buying it, homies.